So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Cattani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcattani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys? And welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Cattani, and we are joined today by the man, the myth, the legend, capital raising royalty, Mr. John Pearl. John is a commercial real estate investor and co-founder of Freedom Investor. He has participated in numerous multifamily mentoring programs and masterminds and has experience both on the LP and GP side of the house. He's a prior service US Army Infantry Officer and a security specialist in the nuclear industry. Currently works at Diablo nuclear power plant, which is set to shut down in 2025. He has publicly stated that his mission is to replace his W-2 income before the plant shuts down. He's also the host of a podcast, Freedom Investor Radio, which he uses to share his journey and open other people's eyes to the power of real estate investing. Currently resides in sunny California. Mr. John Pearl, welcome.
Thanks so much for having me, Johnny. And I want to clarify that bio is a bit old. So the nuclear power plant that I work at has recently announced that they're extending to 2030. So I have a 5-year buffer, but that doesn't change my plan. I've seen the light on the other side and I'm not stopping. So we can get into that in a little bit, but super stoked to be on your show.
So grateful to have you. Obviously, as I alluded, John is in Raise Masters. We have met in person. We have shook hands at Best Ever, which is in my backyard this year. So I expect to see you there. I assume you'll be a Raise Fest as well. John is a great man, a lot of wisdom. We had a full podcast offline, of course, as friends do, talked about a lot of things. We've both learned some very valuable lessons recently. Both joked that despite what our mentors tell us, we still have to learn the lesson the hard way, even the ones they tell us to really avoid as much as possible. But here we are. Okay. I think I know this, but kind of tell us the story. When did you discover real estate and kind of this power and leading to this goal of replacing your W-2 income?
Yeah, man. So for a little bit of context, just kind of the life that I lived leading up to becoming a real estate investor. Typical W-2 income household. My parents, both W-2 workers, no real talk of investing or entrepreneurship. It's always kind of expected that I was going to take the typical route of, going to college and getting a job. So that's what I did. And once I got my job out here on the central coast of California, Diablo Canyon nuclear power plant, I had a lot of student loan debt. And, I graduated 50K in the hole. And, I know that's not a lot compared to what some people are seeing nowadays. But to me, it was like there was no end in sight. So once I finally got my job, I developed a lot of very strong saving principles. I was living very frugally and kind of putting all of the money I was making into paying off my debt. And I was able to do that over the course of about 1.5 years. So once I did that, I took those same principles and I was real stoked about, just maxing out my 401k, and my brother's a financial planner. So we opened up a Roth IRA and I was putting extra money into that. And then at some point, right around the time I had my first kid, so I have a 5-year-old, a 3-year-old, and a 1-year-old, it was like I was just looking for more ways to make more money and free up my time. And I discovered real estate investing. And the way I did that, I don't remember exactly how, but I happened upon biggerpockets.com, which I'm sure you've heard a million times. If anybody who's in real estate investing,
isn't that new? That's that new startup blog, right?
Yeah, man. So I just was fascinated by it, and I went down the rabbit hole, looked at all the different niches, and just decided that I was going to try to get a single family residence in Knoxville, Tennessee, which is where I went to school. University of Tennessee, go Vols. Shout out to them. They got a big game against Bama this weekend.
Dude, they're doing well. My little sister goes there, actually.
Oh, nice.
No joke. Yeah.
Cool, man. Yeah, we'll have to chat about that. Yeah, so I was looking there, but right around that same time, I discovered multifamily, and specifically commercial multifamily, anything 5 units or more. And what I loved about that was that I could force appreciation instead of relying on comps for the sale or the valuation of the asset. It was based on how much income it brings in. So that was fascinating to me. Then I just kind of just started going down the rabbit hole, learning everything I could, all the books, all the podcasts, started going to events and just expanding my network, which now I realize has been extremely important in everything that I've done up to this point. But yeah, it wasn't like I had this red pill moment or last straw moment like a lot of people have. It was kind of just a gradual process of learning what else is out there, getting out, meeting people, hearing people's stories about how they've managed to successfully replace and grow in excess of their W-2 income and live off the investments, their real estate investments. So that was extremely eye-opening to me, and what ultimately put me on this path to, going down the real estate investment hole.
That's awesome. I love it. And that's, pretty similar, right? A lot of people kind of start that residential, and then you kind of learn early on those economies of scale are a real thing. I was having this conversation last night with my parents, explaining how the commercial world works. Like you said, right? It's based on NOI, which you can force appreciation. And, it's not like you're looking at comps and hoping something, sold for a higher price down the street. So we're obviously both in Raise Masters, right? We talked about the lessons we've learned recently from raising capital, a lot more challenging. Now moving forward, is that still something you're focusing on, the capital raising side, or have you identified a different part of the GP that you like more?
Yeah, so the capital raising side is definitely the most intriguing to me, especially at this point in my life. So my partner Daniel and I, we've been working together for about a year and a half now, and we've explored many options. In fact, we even attempted to take down a 72 unit deal in Cedar Rapids, Iowa, that ended up failing. We were going to syndicate it, raise capital from limited partners, and it ended up not working out, and we can get into that. But yes, the capital raising side is what I'm focused on at this point. And the reason I love it so much is because there is a strong educational piece, which is the main reason why I started my podcast, Freedom Investor Radio. It's because a lot of people just simply don't know that these possibilities and opportunities exist. They don't know that you can invest in real estate. You can receive all the same benefits. You can get the cash flow, the tax benefits, the profits, the appreciation, the preservation of capital. And you don't have to do any of the work. All you have to do is build up your network and vet out the person and just build up the relationship to the point where you trust them. So that was ultimately why I started passively investing, because I discovered that. And the longer I'm in the space, or the longer I was in the space, I learned that so many people don't even know that it exists. So that's what I'm passionate about, is kind of helping people see the light and getting them, at least at a minimum, to diversify out of the stock market. For me personally, I'm all in on real estate. I do have my 401k left over, but I'm not investing into that anymore. I'm just all my money going forward is into real estate, because you can be so diversified within the commercial real estate space, or real estate in general. So yes, to answer the question, strictly just focused on capital raising at this point.
I love it. That's awesome. And that's my focus as well too, right? Same thing. We were joking offline about how it can be challenging to, especially in the beginning, to remove sort of the sales piece from, discussing with people. And now that's actually the most important thing that you can do, is kind of remove that sales piece. And by that, I mean, trying to sell people on commercial real estate, right? And in reality, the key is to actually educate, right? Provide as much educational bits as you can, as well as, of course, lead by example, right? People want to see a track record, see that it works. And then, you just have to kind of continue with that model, and people will kind of start to get it, which is very challenging, especially in the beginning, because in the beginning, you feel like you need every little dollar you can get.
Absolutely, man. Yeah. And I've found that in other aspects since starting the podcast, we're talking about education. And when you're trying to raise private capital to help fund a real estate investment, you realize that people, they don't know what they don't know. This is not discussed enough in our society in general, the concept of financial literacy. So that's another area where I'm extremely passionate about, understanding assets versus liabilities, and not trying to keep up with the Joneses. And at a certain point in life, at least my theory, my investment thesis, my thesis with money in general, is that at this point in my life, I'm not worried about what other people think of me, or what kind of car I'm driving, what kind of shoes I'm wearing, what kind of neighborhood I live in. I'm more so trying to build and grow my wealth. And then when those assets are producing that income, that's when I can enjoy all the finer things in life.
1000%. I don't always agree with everything Grant Cardone says. He is a little bit eccentric sometimes, but one thing that I completely agree with is, don't go getting flashy until your passive income can pay for the toys, right? Of course, listen, we all need a car, need a roof over our head, right? No one's saying give all of that up, but you don't necessarily need to drive a Mercedes right now. A Toyota will handle just fine. It'll get you to A and B. And then when your passive income can pay for a Mercedes or whatever it is you have your eyes on, then you go buy the Mercedes.
Absolutely, man. Couldn't agree more.
Yeah, I love it. And it's hard sometimes, especially in the beginning, right? Of course, we are leading by example. We're both passive investors. We invest alongside our investors, but it can be challenging sometimes to have a conversation with your peers and, not try to sound coachy and like condescending about the lifestyle you've chosen, even though you're trying to be like, hey guys, there's something to this, I promise. Like, may not look like it now, but in 5 years, 10 years, you're going to be asking me. So come along now.
Yeah, absolutely, man. Yeah. It's tough. You don't want to be bossy, and, we feel that we have this information that is valuable for people to share, but ultimately, we're putting it out there for the world, and those that want to take it and use it, that it's there for them. So
absolutely. Couldn't agree more. Cool. So what, we were chatting offline. What is it you're working on now? You mentioned, and we've had Baudry on the pod, Avestor, an awesome platform. So kind of touch on that and what you guys have launching.
Yeah. So my partner, Daniel, and I, we just launched the Freedom Investor Fund. So what that is, it's a customizable fund on the Avestor platform. You mentioned Baudry, great guy. He's him and his partner Sanjay are the founders of Avestor. And so we decided to go with them because we wanted to focus on strictly raising capital. And to do that legally, you have to do it through a fund. And, part of our reason for doing this is, well, there's a number of reasons. A few of the bigger ticket items is, I mentioned this failed deal that we've had in Iowa. And we realized, we spent hours, we spent days, weeks underwriting hundreds of deals. We thought we had a winner. Long story short, due to a number of reasons that were beyond our control. Some of the reasons were rookie mistakes, full transparency, but it pointed out to us that this is an unfair space. The best and most experienced operators are going to be the ones that get the best deals. So what is a way that we can provide value to them and also provide value to our our network of investors? Well, we can help raise capital for these deals. These folks that have the best deals, they have no shortage of good deals coming through their pipeline, but they always need more capital. So what our stance is that we would educate and try to connect our network of friends and coworkers with these operators who have all the best deals. So we've been in the space for a few years now. And over the course of 2 or 3 years, we've developed a strong network of operators. So what we're focused on now is kind of being the link between the two. And through our fund, we can do that. And we won't be participating in the active management of the property, but we do have access to all these operators. So that's where we're trying to to be that key link to bring our network into these opportunities that we ourselves invest our money into.
Absolutely. And to clarify, what it allows you to do is not have to be a part of the GP and the essentially day-to-day operations that go along with it, right? So because of compliance with the SEC, unless you're licensed to raise capital, right? You have financial licenses, you can't get paid just to raise capital. So there's a few ways around that. One is a fund. The other is to join the general partnership and, contribute not only capital, of course, but also some form of asset management or, due diligence, whatever it is, any part of kind of the general partnership pie, you have to contribute. A vestor allows you to essentially have an evergreen fund into all of your deals.
Yeah, absolutely. Absolutely. Nailed it.
Yeah. So it's just a way to, I don't want to say a workaround. I'm trying not to make it sound sketchy. It's perfectly legal. It's just a legal way of not having to get licensed, which brings on its own more compliance and
one of the cool things about it is, so the easiest way to think of it, if you're familiar with syndication, so syndication is the pooling of money together where between a bunch of investors or a number of investors. And there's two parties. There's the general partnership team who manage and operate. They find the deal. They do all of the work. And then there's the limited partners who are the passive investors. And the fund is acting as one limited partner. And we are the connection between the investors and the general partner. And a cool thing about investing through a fund is that you can gain access to the same deals, but you can sometimes negotiate a stronger return profile. So the cool part about it is if we are able to raise, say, to pool 500K or $1 million, for example, and bring all of that together, and the fund is that one limited partner, then a lot of times the sponsors, the ones putting the deals together, the general partners, they will give better incentives, a better return profile to that group of individuals, and we can pass that through to the investors. So you can potentially get a better return for investing in the same deal.
Absolutely. Yeah, that's such great insight there, which is huge, right? For example, if you went straight to the deal, right, minimum, let's say 50K, maybe it's a 70-30 split and an 8 pref, right? Whereas you go to the fund and the fund can hit another tier of investor class. And so maybe then you're getting a 9% and, like an 80-20 split. The fund gets 80-20 and then, that's split up inside the fund, however that works out. But you're typically going to keep the same economics, right? You want your investors to be happy. But you touched on the most important part, which is really the access, right? And that's one thing that I didn't realize until honestly not too long ago is how many operators, good operators, I actually see by being in the space every day versus even someone who is a passive investor doesn't, or is brand new and doesn't have access to. I mean, you're talking about potentially, the difference between them having to invest with someone new as well, or being able to bring a very well-seasoned deal from a well-seasoned operator.
Yeah, I mean, I think a big part of it is just the getting out and networking. And there's nothing stopping anybody that we know from investing directly with these operators, but it does take time to build up that relationship and, to get out there and do the homework on them and to learn how to underwrite the deals. And not everybody wants to do that. And, guys like us, we enjoy getting out and hanging out. These people are our friends now at this point. So, we go to these events and we meet with them. We're seeing them periodically, hearing what they've been up to, and generally just building relationships. That's the most important part, the know, like, and trust piece. And so that's where, doing what we're doing, where we can come in handy and help our networks out.
Yeah, absolutely. Couldn't agree more. And it's, and then so the next piece obviously is helping our investors and our network understand that, that's what we're doing, and why they're able to see all this. And I think one piece for me that I've been trying to help understand now that I'm, really in the thick of it is by the time an investor is seeing a deal presented, it's gone through a process, of vetting and understanding what's happening and getting to know the operators as well, right? And not just like, oh, hey, here's this deal and the numbers look good.
Right. Yeah, totally.
I love it. Yeah, there's a lot more that goes into this than really meets the eye. And so obviously a lot of things changing economically, right? Main thing, of course, being interest rates. What are you seeing in terms of like your conversation with investors? Is it more challenging right now for you to kind of get people to understand that this is still a time of an opportunistic time?
Yeah. So one of the big lessons I've learned over the years is to not try to time the market. If you think back to spring of 2020 when COVID was hitting, everybody was scared. Nobody wanted to put their money in real estate. Well, not nobody, but there were people investing. But the general consensus for a lot of folks was that they were going to hoard their cash and not do anything with it. And in the real estate space, that ended up being one of the best times that you could buy in recent history. Things skyrocketed. But the most important thing, in my opinion, during times like this, I think it's different now than at the beginning of COVID. We are experiencing a lot more uncertainty. The interest rates are rising. There's a lot of FUD out there, fear, uncertainty, doubt. It is important to invest with experienced operators, with folks that have been through it. I'm looking for guys that have been in the space since pre-2008, guys that have been through the roller coaster, and there's so many little details to look out for when you're performing your underwriting and when you're managing the deal, when you're getting your team together, and people that have been through a downturn like that already are going to have that experience. Whereas somebody who's, been in the space for a year or two, and they're on their, even for 5 years at this point, if you've been investing in real estate since 2012, strong chance that you've seen nothing but great returns, regardless of your business plan and the way you're running your deals.
Yep.
It's just how it is. So what I'm looking for is for folks who've been through that and they know what to look for. And those are the type of operators that we're looking to partner with. And, they're out there, they're not everywhere, but there are plenty of folks out there who have that experience level.
Yeah, absolutely. It is fascinating as you get deeper and deeper into the industry and seeing how many billion-dollar portfolios are out there. And you're like, holy, who still aren't considered institutional, right? Think of like the passiveinvesting.com guys like Dan Hanford and those guys, right? And, there's some other groups that we've obviously been presented through Raise Masters. And you're like, wow, there are some people out there who have been in this industry, and we were even talking, offline about how many people around us and in Raise Masters have been doing this for 10 years. And that goes back to what you're saying, right? They've really enjoyed a nice run. And obviously now they're plugged in enough that things are rolling. But, I'm curious to get your take. This seems like one of the hardest times to be getting into capital raising. How does that make you feel?
Yeah, I think it's, I'm up for the challenge. I still, the principles and my beliefs haven't changed. Real estate is and will continue to be one of, if not the most best ways to generate and keep your money, especially during times of economic uncertainty. I think it's about having a long enough time horizon. If you're just focused on making a quick buck, maybe now's not the time to do that. But if you're focused on long-term generational wealth, that's a term that's thrown around a lot in the real estate space, but it's true. If you're thinking long-term, then who cares if the interest rates are above 7 right now? They're going to go back down. If you can figure out a way, you just need to be more selective with the deals that you take on. There's not as many home runs floating around out there right now as there were 5 years ago, but they're still there. Maybe you're going to get, you just got to get on base. You get that single and double, and you invest in enough deals, and, ultimately it's going to be a good thing. You might even lose some money, but you learn from those mistakes and you apply them to the future. So it's the principles are still there. I still believe in what we're doing here with real estate. And it's really just about getting back to the basics, investing in strong markets with good principles, investing with strong operators with a strong track record, and, learning, educate yourself, get familiar with the business plan. So when you do decide to invest in a deal, you're not just placing your faith 100% into somebody else without knowing what you're getting yourself into.
I love that so much. That's 100%. It's funny. Obviously we're biased, right? But for good reason. But yeah, you really nailed that. Like, I've lost money in this industry and I'm still like, yeah, cool. Now I just know how not to do that thing. Right. And you see it in other industries, right? Like I worked in the stock market and I talked to day traders who had bad days, right? They're not just going to stop being a day trader because they had a bad day. You just go out and you stick to your principles, which is huge. That's the biggest thing, I think, is especially in these times, not getting that shiny object syndrome and being like, oh, well, things are kind of down in the multifamily. It seems like everybody's doing that. I'm going to go completely switch to this different asset class. And, if you're not careful, that can get you in trouble. But if you do it right, like you said earlier, you can diversify across this whole industry in so many different ways and hedge so many different things and dollar cost average, just like you do in the stock market, just with real estate instead.
Yeah, absolutely. And it's not to say that, there's not going to be, the stock market's not going to go back up. It's in a decline right now. And, the crypto boom, I'm sure there's going to be another one. But real estate is tried and true. And, I heard something recently. I'm sure people have been saying it for years, but first time I ever heard it said, don't get married to the interest rate, but, get married to the deal itself. So mentioned it earlier, even if the interest rates are high, you get into a deal, you can refi out of that eventually, when the time makes sense. There's all sorts of different ways you can get into these deals. You just got to either know the right people or do the right type of research.
Yep, absolutely. And that's why, like and I'm sure you're starting to see this too, right? As we're, obviously showing that we're still staying involved in this. And obviously social media helps a ton, right? I'm starting to get friends reach out to me. Hey man, let's grab a drink. I want to chat about real estate, and that's my favorite thing. I could talk about it all day long and pretty much do. And so anytime that I can help someone understand the power, point them in the right direction. When I first got into this, I used to be like, no, you should only be investing in commercial real estate. But now if someone's like, yeah, I want to buy a couple Airbnbs, I'm like, cool. How can I help you do that? I just want to help people. As long as you get real estate in your portfolio somehow, I'm happy to help you do that. It doesn't have to be through me, through commercial real estate.
Yeah, totally. It's not for everybody. Investing passively is not for everybody. And that's one of the first things I tell people, like, full transparency up front. You will have no control over this deal. Like, yeah, you can shoot us an email and provide suggestions, but take it into consideration. But ultimately, you're completely hands off. And that's, one of the best things about it. It's the only true means of passive cash flow that I'm aware of in the real estate space. Maybe they're out there, but if you're an owner operator of a portfolio of 5 single families, that's going to be a lot more work than investing passively in 5 syndications. But yeah, the deals are there, and you just need to know where to find them.
Yep, absolutely. I love it. Well, John, as always, it's amazing talking to you. Great to see what you guys are doing. I know, obviously, as we chatted offline, the runway, it's a little bit longer than I think we all anticipated, despite Hunter literally telling me, hey, man, this is going to be slow. Oh, is this what you meant by that, Hunter?
So true.
But I'm like you. I love it. Taking on the challenge head first. We'll go ahead and wind down here. We'll jump to the final 5. Perfect first question. Best advice you've gotten from a mentor?
Thinking long-term, man. Just, we touched on it a little bit, but anything worth doing in life is not going to come quickly. And, we're surrounded by a bunch of extremely successful real estate investor entrepreneurs. And, sometimes it's tough to not compare yourself, but everybody had to start somewhere. And for anybody listening, just get into your first deal, think long-term. It may not go well, but apply those lessons you learn to the next deal, and it's going to just get better.
Absolutely. I love that. What is it about your career that makes you feel like you're fulfilling your why?
So for me, it's real estate investing allows me to have control over my life. I still have a W-2 job, but the reason for investing in real estate is because it frees up my time. Ultimately, it will allow me to live the life that I want to live. I can, go to sleep and my investments will still be generating income. My why is my family. I want to travel the world with them. I want to be at all the sporting events, and real estate allows me to do that.
I love it. That's awesome. Favorite non-real estate or investment related book?
Oh man, that's a tough one. Probably, let's see. I'm just going to look through all my books right here. Most of them are real estate related, but probably the Compound Effect, man.
Nice.
By Darren Hardy. That's it's not real estate or investment. It's more of a personal development book. I'm also a huge Jim Rohn fan. I listen to his audiobooks almost every day. Anything personal development or, just related to being a better human, improving, I'm all about it.
I love it. Yeah, I'm currently listening to The One Thing.
Nice. Yeah.
Such a good one. So powerful.
Totally.
Has really changed. I mean, it's crazy how much that's changed your focus. I love it. If you could have any superpower, what would it be?
So this is a funny one. I talk to my wife about this all the time, going back to the financial literacy topic. So if I had one superpower, I would love to be able to see people's net worths.
Oh, that's a new one.
Because it's just like, you drive or you go around anywhere you go, and people are just flossing, right? Like,
yeah,
nice watch, nice car. I'm like, how much money do you really have though?
Leverage to the gills these people have gotta be, dude.
Yeah, it's kind of a weird one, but that's funny. That's a good one.
I love that. I had this conversation. This was a couple months ago. We were at the lake, and I was with my dad, and this like brand new truck backs in a brand new boat. And he's like, that's $100,000 truck and a $150,000 boat. He's like, what the heck are these people doing? I was like, Dad, said, that's an 850 credit score because that's how the credit world works. Said, but I guarantee that every dollar of revenue that comes in is going out to something for those people.
Yeah. And you never know, but
you never know.
You never know. But
I could be wrong.
Based on my experience, in general, I find that people try to look like they have more money than they actually do.
1000%. And, it's fascinating to see. And hopefully that's not the case, right? Because as soon as a bad time comes, those toys are the first thing to go if you are over leveraged. But one thing that I'm still yet to experience, and I'll probably have to obviously learn the hard way, is, you hear people say, oh, you never know who has money to invest. And it's like, man, sometimes I get those profiling glasses on and I feel like I may count people out who shouldn't be counted out.
Absolutely.
Yeah. Awesome. Last one. What's the best way for people to get a hold of you and learn more?
Yeah. So the best way is to go check out our website. If you're somebody that is kind of sick of the way that your stock portfolio is treating you or your 401k, and you're looking to learn more about how you can invest passively, then I'm your guy. Just go check out our website. You can download our free guide to how our process works. That's at www.passivecreprofits.com. That's CRE as in commercial real estate. So once again, www.passivecreprofits.com. You'll download the guide. All of our links to jump on a call or learn more about what we do are included in that.
I love it. We'll link it in the show notes. John, always great to see your face and talk to you. Thank you so much for your time.
Johnny, thanks so much for having me, brother.
Always. Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.